This month, Life Insurance Strategies Group is back in Guernsey in the Channel Islands. Now we're hearing a lot of people talking about universal life once again. Remember, universal life is a type of cash value life insurance where the insurance company invests premiums and then gives a share of that return to the policyholder in the form of a crediting rate that they typically set once a policy year. So for instance, the insurance company may declare a crediting rate this year of say 4%. And that's what the policyholder will receive. Now, in these contracts, there's usually a guaranteed floor of what the policyholder can be guaranteed to receive, no matter how the interest rates do in the investment environment. Now, this is important because back at the turn of the century, when interest rates were high, Universal Life was crediting over 7% to the policyholder. And many of those contracts had a 4% minimum floor guarantee. Now, a lot of the policyholders that bought it thought, well, we don't have to really pay attention to that guarantee. That guarantee could be a lot of things, right? It could be, 3%, 2%, but we're never going to see it. Well, of course, as interest rates declined over the first part of this century, those policyholders did see the minimum. A lot of those contracts that had 4% guarantees are at 4% guarantees. And I don't know that a lot of insurance companies who are seeing higher rates on their new business are going to be able to see that in their older blocks of business, be able to raise those interest rates. So what we tell clients at Life Insurance Strategies Group is when they're buying Universal Life is really to pay attention to that contractual guarantee for the minimum crediting rate, because I think that that's where they're going to end up. And today it may be a little bit sunnier, but I think you're going to end up at the policy minimums, which are no longer 4%, at least I haven't seen any. They're more around 2%, 1%, or even 0% less expenses of the policy. So for instance, you could have a crediting rate of 0%, but then with policy expenses, have a return that's negative 2, 3, even more percent. So look, it's great that interest rates are coming up and we're seeing Universal Life, which is an interest-sensitive product, follow those rates. That's good for policyholders. But what we don't see a lot of are insurance companies, especially on blocks of business that are closed off, meaning there might be a newer version of the product. We don't see insurance companies really running to their old blocks of business to say, hey, interest rates are going up. We could move rates, the crediting rate up on these products. Unfortunately, that just isn't happening. So I'll say it again because it's very important. When you're purchasing Universal Life, look to the policy minimum crediting rate guarantee. That's probably where you're going to end up. And as always, we tell people to look at the cost of insurance guarantees. Insurance companies can raise the cost of insurance, and we've seen some stock holding companies do that over the years. Now, that's not what this particular video is about, and we'll come back to that in a future one. But for right now, let's concentrate on that crediting rate. Let's just be careful and keep an eye on it. Remember, at Life Insurance Strategies Group, we don't sell products. We help our individual and corporate clients make decisions about complex life insurance transactions. If we can help you, reach out to us at lifeinsurancestrategiesgroup.com.